Global liquidity has become one of the most important data points to track for trying to forecast and predict upcoming Bitcoin price action. However, there may be an even more effective tool for tracking future movements in BTC. So let's jump right into it here on the global M2 versus BTC chart we have here on BitcoinMagazinePro.com. Now, this has been one of the most talked about, most discussed, most shared metrics, and one of our most viewed charts we have on Bitcoin Magazine Pro throughout the entirety of this bull cycle. It's becoming a major talking point, and for good reason. What we can see is the correlation between the global M2 money supply, and this is, if I just scroll down here, it'll give you a little bit of indication of what this is actually tracking. It is the total amount of currency and near money within a country's economy. And we can see we're tracking all of the world's major economies within this metric. What we can see when this is expanding, when we're seeing the money printers going, when we're seeing huge fiscal stimulus and more liquidity entering major economies, this usually coincides with Bitcoin having very strong periods of bullish price action. If we look here in the 2020 bull cycle is probably the most obvious example of this, when everyone was locked at home, but everyone was still getting these stimulus checks. Everyone was buying risk-on assets and gambling and doing more speculative investing. We could see Bitcoin rallied from just a few $1,000s to over $60,000 in a relatively short space of time with this huge explosive run-up in price action. But this isn't the only instance in which this has happened. If we actually look back to 2016, 2017, it was a very similar occurrence. And on the flip side of that, when we actually have contractions in global liquidity, again, like we saw in 2018, 2019, most recently in 2022, these coincide with really long periods of Bitcoin bearish price action. We have these huge drawdown periods. Now, I think this metric is best viewed go there in the end. I think this metric is best viewed when actually looking at it on a year-on-year basis, because in general, we can see that M2 liquidity is pretty much always going. Governments just love to print money. But if we actually look at the acceleration or deceleration in this expansion or contraction on a year-on-year basis, it really outlines the correlation between the Bitcoin price action and the underlying liquidity being injected or taken out of economies. Well, we can see this blue line here, the global M2 money supply year on year. Once this is trending very much to the upside, again, little dips here and there, can't really be taken too seriously. I won't say ignore them because it obviously could be the start of a more major decline. But in general, if this is trending to the upside, even if we have a few little dips here and there, if the general trend in liquidity is going up, then Bitcoin is likely to have some very positive periods of price action. And we can see that when Bitcoin is having these big, massive swings to the upside with hundreds or thousands of % of year-on-year gains, this is when the global M2 money supply is absolutely printing on a year-on-year basis. And this really outlines the difference between just the standard chart and the year-on-year chart, because here we can see this massive period of contraction in this wasn't necessarily all the global M2 money supply decreasing. A lot of this was actually just the rate of increase decreasing. So we can see here that this is one of the best metrics to actually keep an eye on, and it's definitely one that I've been watching a lot throughout this entire cycle. However, actually looking into some other alternative metrics, because this is great, but realistically, it doesn't update too quickly. And if we just go over to TradingView here, what we can actually see, this metric is actually best utilized with a little bit of a delay on it. So again, while it's still incredibly useful for looking at where Bitcoin's price action can go, it does take a little bit of time to actually play out, for this liquidity to actually trickle down. First, probably initially into more safe haven assets such as bonds and gold, then into equities, then more risk-on speculative volatile assets like Bitcoin. This is probably why we have a little bit of a delay. So if I just add on here, what we can see, this green line is the global liquidity, and this blue label here shows the correlation between the Bitcoin price action and this global liquidity. So we can see this is an 83% correlation, which is incredibly strong. But as I mentioned previously, if we add a little bit of a delay onto this, this actually increases this correlation quite noticeably. This is the correlation over a 2-year or half cycle basis. And what we can see is it looks incredibly accurate, especially if we just kind of manually adjust the Bitcoin price action here. We can see over the most recent few months, this has tracked and forecasted the Bitcoin price movement pretty much to perfection. Although recently we can see we've actually had a little bit of a divergence. Recently on the global M2, which has continued to spike to the upside, would indicate that Bitcoin is a little bit lagging behind, where recently we've just been chopping and consolidating a little bit. So I was looking to see if there were some alternatives to this that were maybe a little bit more specific to our industry. So what I can do is if I just change this back to 0, and again, remember that 91.69% correlation figure. What we can do is if I change this to stable coins, so this is USDT, USDC, DAI, USDD, I think is another one. What we can see is this is 91.99%, slightly more correlated. Now what we can do is, I actually did try to create an indicator for this, but realistically you can just type in on TradingView, stables.c, and then, is it stables.c? Did I spell stables wrong? Stables.c, stable.c. I got there in the end. You can get this data, so it's completely for free. Anyone can use it. And in fact, we see 100% correlation between these two data points. Crazy. If I just go back to the BTC USD chart here. Now this is great, but obviously again we can see that this has mainly just been moving to the upside. Again, if we zoom out, we can see there are areas of period of time, where the global supply of stable coins, not liquidity, is contracting. We're seeing the amount of USDT decreasing. We're seeing the amount of USDC and DAI, etc., being burned or removed from circulating supply. However, what we can see is, again, taking some inspiration from the global M2 chart rather than just focusing on the underlying value in this metric. If I actually look at the rate of change in this metric, it really gives us a good indication of what we can expect to happen in the upcoming BTC price action. So here what I've done is just look at the rate of change in the stable coin supply on a 28-day or pretty much a 1-month basis. Now what we can see, if we just zoom in, again, this is very accurately outlined upcoming price movements for BTC. What we can see is most recently, for example, if we look towards the tail end of 2024, after our long period of choppy consolidation, once we saw the massive increase in stablecoin liquidity rate of change, this indicated some upcoming massive price appreciation for Bitcoin. And again, recently, as we saw this massively dipping to the downside, it coincided with the Bitcoin price having this long 30-ish% drawdown period. Now what we can see is where the global liquidity, the M2 global liquidity supply recently has been massively pumping to the upside, potentially giving us this divergence between Bitcoin price action and liquidity. We can see the stablecoin rate of change has tracked the Bitcoin price action almost perfectly. Even this most recent dip down to the day was measured by this rate of change in the stablecoin supply. And recently we have seen a little bit of a pump on this, but rather than just tracking this, because people are going to look at this and say, well, that's just the Bitcoin price action. No one can predict what the Bitcoin price action is going to do. So how is this a useful metric? Well, really simply, if I just add on a 0 line onto this, and I'll make it a little bit easier for you all to see, one of the best ways to actually utilize this data point is for waiting until we see a cross above 0 on this metric. So for example, if we just track every single time that the global stablecoin liquidity, very complicated video it seems to film today. We can see every time this crosses above 0, indicating a positive rate of change in the global stablecoin supply. This has always been a very good opportunity to accumulate BTC. What we can see is every single one of these, hang on, wrong button there. Every single one of these, well, nearly every single one of these indicated a great time to begin accumulating BTC, and especially during these periods down here where we can see a long drawn out period of contraction, but just some infrequent flips between this, we can see these were all great opportunities to be buying Bitcoin at a massive discounted price. We'll just zoom out of this most recent cycle here, and again what we can do is throughout the tail end of that previous bear cycle, and just zoom out, and just as we ran up towards that double cycle top peak, I'll just hide that. Now, if you just look at this chart here and all of the purchases that you'd have made by using this dollar cost averaging system, by waiting until the 28-day rate of change of the stablecoin supply was turning positive, then you would have massively accumulated Bitcoin towards the tail end of the bear cycle, with a huge amount of accumulation occurring just between $15,000 to $25,000, $30,000, as Bitcoin then in the subsequent months rallied to above $70,000. You're then accumulating as Bitcoin was chopping and consolidating, often as Bitcoin was towards the bottom of that range at around $50,000, $60,000, before we ran up to $100,000 plus. And then most recently, you were accumulating as Bitcoin had this 30% retracement, as everyone's calling for a new bear cycle, dropping down to $60,000, $50,000, $40,000, everyone going crazy. This is when you were strategically accumulating, because you could see that the liquidity, the dry powder on the sidelines, the stablecoin supply was beginning to rapidly increase. And this gives us some good indication that investors are waiting on the sideline, that there's more and more of this liquidity being printed, ready to be injected into the crypto and Bitcoin markets. Now, this isn't just something that's completely new. I've not found this, and it's just a new type of analysis no one's done before. We can see that these Tether printer Twitter accounts have existed for years. This is all the way back in 2017. I remember people tracking the liquidity of Tether. Every time it was printed, we'd always see a big pump in the Bitcoin price action. But like I said, similar to the year-on-year chart we can see for the Bitcoin price here, once we actually see the rate of acceleration or deceleration going positive or negative, this gives us a little bit more insight than just tracking the raw values of liquidity. I still think the global M2 chart is definitely one you should be watching, and I do think the forecast that we see from that is something that we should definitely take into account. But why look at something that affects all markets when we actually have data specifically impacting and tailored for Bitcoin and cryptocurrency markets in general? Probably gives us a little bit more insight. And if I just very quickly, I know this is going to be a long video, but if I very quickly just go to something like the 4-hour chart, again, something we cannot get on the global M2 supply. And if I just add on the rate of change again here, we can once again see that this works intraday. We don't have to wait every single week or every single month to actually get this data. We can actually see on a much more intra-cycle, more frequent basis, the changing supplies in liquidity from stablecoins. And we can see it still works incredibly accurately. Once we have these massive dips beneath, it indicates a really good area to begin aggressively accumulating Bitcoin. And again, when this massively spikes to the upside, it is historically indicated a great area to potentially begin scaling out of your positions or taking profit. So definitely add this tool to your analysis. It's completely free to use on TradingView, and it's definitely something I'm going to be keeping an eye on over the coming weeks and months. Also, if you haven't already, please don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your #1 source for Bitcoin analysis. So just to summarize, global M2 liquidity has become one of the most important data points to track for trying to forecast and predict upcoming Bitcoin price action, especially when we add this delay or lag to the data of around 10 weeks. However, what we can see is using a similar metric but specific to the cryptocurrency markets by tracking the supply of stablecoins, including USDT, USDC, and DAI, and I think USDD is the other one. This has been a very popular data point to watch historically, but tracking the actual rate of change, the monthly 28-day rate of change in this data point, has given us some unbelievable insights throughout this cycle and all previous cycles as well, especially when we're using this to scale into positions when we see the rate of change turning positive, as well as potentially scaling out of our positions when we see huge massive spikes to the upside in this metric. So let me know if this is something that you're going to be watching going forward, because to me it looks like another great tool to add to our arsenal, especially when we add it is for confluence for more intra-cycle, potentially even intraday trades and positions. If you like this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin, with over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more for a fraction of the standard industry price. And make sure to check out our latest video discussing MSTR and its stock price potential over the coming few weeks and months. It's a very bullish outlook, so if you have any interest in strategy and Michael Saylor and their Bitcoin treasury company Accumulation, then it's definitely one you need to watch. And let me know what your thoughts are on potentially tracking not only global M2 liquidity, but as well as that this stablecoin supply is impacting the cryptocurrency markets. As I said, let me know in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.